Welcome back everyone. So this is our next episode of the mentorship here. I don't know if you all can hear me, but I can see that you can see my face, and that's good. So as you can see, I'm at work again. So let's continue this anyways. So right here, yesterday on my previous video, we have seen about this setups right here, this setups, and how to manage it accordingly, right? I mean, as the trade goes on, right? Where to place your stop loss, 30p3 has been met, after 30p2 has been met, what to do, everything is said in the previous video and the videos before that too. So there's no point in repeating them. Anyways, let's come back here, and this is our interesting chart here. It is an interesting price action right here, what you're seeing. So anyways, do you have a black box around here? Anywhere else? I mean anywhere around this chart? Yes, well, there and there and there. Three. How black box? How? How is that possible? Let me zoom in here. Black box has got you covered. So I already know this two and then the breaking candle, but as you zoom in, the 2.5% was not broken. What does that mean? No entry. No entry right there. We need a push, a little more push. Okay. Then an interesting thing happened here. 1, 2, the second candle and the third candle traded more than 23. It even reached the 71.6 extension, Fibonacci extension. Do you know what I mean? Which means this is 50%, halfway of the Fibonacci. It went above the halfway, which is amazing, which shows you that this is a black box. Okay, at least it has to trade 23.6. I already told you about this, so no need to repeat this. So it is validated as the black box here. Then what happened? Did we really break? Yes. Where? Exactly right here at this bullish candle, not the previous breaking candle. The bullish candle, it went further down, which means you know that we are moving down. Okay, that is the algorithm. The algorithm now changed to a sell program. We are in a sell program, and then every attempt to move up is just an opportunity to go down. Why? TP2 is not hit yet. Let's continue pumping. So as I told you, the previous black boxes are going to be used as an extension, a directional indicator in TP to determine our TP to TP6, right? So that didn't hit TP2, which means we're going to use it for directional indicator. So if it breaks the downside, what does that mean? I am going to target this TP, even this TP3, in addition to the TP of the new black box, which I have entered the trade, which the black box has shown me that 2.5% is broken, which means I am in action now. The next thing that I need to do is determine if it is worth it. I already know we are moving down. The next thing is to determine if it is worth it. Okay, everything that it has a step. So how do you determine if it is worth it? Check my previous video. I'm not gonna raise a whole other new topic over here, so it is gonna be a whole day. It is gonna need a whole day. So we need move down, which means that's a sale. Targeting we're down there. Why? Because we are in a sale program. Sale. Every attempt to move up, a sale opportunity. Stop loss up there, sell it. Sell it. Where do I sell? This area is a selling area. Where is the black box? The first two black box. The first two candles are found. Okay. The first two candles are the area where the first two candles are found. That is the area you are interested in. Look what's the price did. It's just nuts. It is crazy. It is just crazy. Look at that. It didn't move any more higher. So finally, that's a sale. Another sale. Down there, sale. That is targeting down there. TP20%, including the previous black box. So then this crazy thing happened. As you can see, price just smashed every sell stop, every stop loss on the sell side, and went to here, right? Broke the earth and went to here. As you can see, after that dumped. So the principle is a TP to take partial 30% off. The same thing applies at TP3 take partials, take 30% off. Which TP3 is it? Which TP3 is it? It is the new black box, not the previous one. The new black box. I'm trading based off of the new black box, not the previous one. The previous one can be used as a target or to know that the price is gonna gravitate to that direction. Okay, we know that the price is gonna move in that direction. So that's why we place that as a marker. It's as a marker. Okay, it's a marker. It's really nothing more. Then after that dump, you took partials, 60% out. Now it trailed or stopped down there at TP2. Price moved, hit TP3, and then moved down. Now put it at TP3, and then moved further down. That is trailed at TP4. Put it at TP4, and then the price dumped down, then trailed at TP5. I don't know if there is any TP5. I don't know, man. So anyways, we trail not closer, a little far away, so that if the price reverses direction, you don't miss on your profits. Your profit won't be eaten up. So don't trail too close, don't trail too far. So until TP4, you have a place that you need to put your stop loss when you are trailing. But after TP4, since the price, most of prices do not breach or do not move beyond TP4, it is highly unlikely that we need a TP5 or TP6. Okay, so after that you can get out of the trade if you want, or you can trade it too close. It's your choice. It's your choice. So next thing that happened, you are out of the trade. You traded it too close. Now look, the candle came back up, got you out of the trade. You had one entry and two entry, so both of them are out down there. Now you are waiting for your next setup, and you got it down there. 3 candles. Then these 3 candles, did they break? Yes. Where? Down there. Down there. 0.5% is broken. What does that mean for you? The next thing is determine if it is worthy to enter. So as you can see, I measured from the bullish, and then TP2 is found there, which is exactly at my entry. What does that mean? It means I'm not gonna enter a trade here. I simply avoided a loss. Look at that. I simply avoided a loss just following this rule. Simple. So let me zoom in here for you. As you can see, TP2 down there. After hitting TP2, look what the price did. That is why I tell you take partials at TP2. I don't get take partials. And look what happened. It reversed direction. So anyways. So I'm not gonna enter this trade. Why? Because the second criteria is not fulfilled. So I'm gonna pass it, okay? It's a pass for me. Then I wait for the next setup. I don't care if I miss this setup. I don't care. I don't care. Why? Because I got multiple currency pairs, multiple indices, gold, silver, Nasdaq, US30, S&P 5, everything. I can trade whatever I want. Black boxes everywhere. I don't care. So I wait for the next setup. Then what happened? We got one. Where? 1, 2, 3. And then the fourth one broke, but 2.5% not broken. I wait. Bam! Up there, it is done. What does that mean? It is an entry time. How do I measure an IPP? The wick and the bodies. Why? Because the bodies are equal here. The bodies, the wick. Okay. Then you determine your TP2. So you can see what happened here. TP1 and TP2. TP2 is most likely upside. TP2 is most likely upside. So in this case, TP2 is near my entry again. So sorry for the noise, guys. So anyways, where were we? I was here, right? I was here. So the first thing that we need to do is determine if there is inefficient platforms. Okay. If there is an inefficient platform, what does that mean? A black box that didn't hit TP2. Black box that didn't hit TP2. Why is that useful? It's because we are gonna use that as a target. Even though we are entering inside this bar, we are targeting the TP for this black box right there. And the thing that I didn't tell you is, as you can see up there, 2 and the third one block. What does that mean? So say block was up there, down there in 3. Okay, what does that mean? It means after this big candle has closed the trading, you determine the body of the lowest and highest from the 3 candles. Okay, determine the lowest and highest from the 3 candles. Why is that useful? It is to determine the TP for the coming black box. Okay, for the coming black box. since we broke the downside, I am expecting a lower price, right? I am expecting lower price. What does that mean? What does that mean? It means that my Fibonacci is going to project to the downside. I am going to project the Fibonacci to the downside. I am expecting lower price, right? Then what happened? This black box happened. Sell, stop loss upside. At first, is it worth it? Which means, is the stop loss wide? Is the risk too much? If it is, then I'm not going to enter it. If it is acceptable, if it is logical, I'm going to enter. Okay, I'll enter it. So that's it. Stop loss upside. Then another black box forward. That's the buy, stop loss downside. Even though my entry and my TP2 are on the same place, since I have already drew a narrative, I have already found a direction for a bias. I'm going to execute these trades. If the risk is not too much, if the stop loss is not too wide, not high, very high, I'm gonna execute this trade, putting my eye on the target TP of the previous inefficient block. Do you get what I'm saying? I have already determined the TP2 down there for this one. So every black box here, I am expecting a lower price. What does that mean? I'm gonna say, I'm gonna sell down there, stop loss upside. Right? Simple as that. Where is my target? This black box's TP. Okay. Even though the TP2 of that particular black box and my entry are in the same area, since my risk is not too much, and plus we have a previous black box that is inefficient, that didn't hit TP2, I'm gonna use the previous black box as a target. Since the black box that I entered the trade on has already hit its TP2, its objective is finished. It doesn't mean it is gonna stop zero. Just like this one, it might change direction and continue trading up to TP3, to TP4, just like we saw on the previous example. Okay. I know it is contrary to what I told you before, but after exploring some black boxes in their behavior, I found out that it is better to find a black box, an inefficient black box, by going back, just like this. By going back, the first inefficient black box that you found, that is the target. You don't need to go years and years and years and years backward. You don't have to do that. Okay? You don't have to do that. The first black box that is inefficient, that didn't hit the people, first black box that you found is your target. It is your target. Okay, black box, what if I don't find anything? Okay, because this might happen. What if I don't find anything? So, in that case, there is no trade here. Why? 52 is already hit. 52 is already hit. If 52 is already hit, then the price might can still trade just like this one. Hitting your stop loss, buy. Hit your stop loss, sell. Hit your stop loss, buy. It can move forever like this. So you will be chipped in both directions, chipped away. Okay? Because there is no clear direction. We are still accumulating. We don't wanna be there when price is accumulating. Just like this one. Just like here. We don't wanna buy right there and sell down there. Buy there up there, then sell down there. Then another sell, then another buy. No. If you do that, you will below your account. So the best thing to do is to go a little bit back and determine a TP and inefficient black box. That is your best bet. That is, and I am sure you'll find one. I am sure the market will not move randomly. The market will not move randomly, bro. The reason that this market pumped up is because there was a black box that didn't hit TP2, just like this one. Right there fulfilled. This one, I'm not sorry, up there fulfilled. Up there fulfilled, up there fulfilled. Now, anything that is moving up is just because there is inefficient black box before this. When you go back, I promise you, you'll find it. I'm promising you. So, this big black box can be used as a target. Used as a target. So I'm gonna sell down there. Why? Because I have a target. I don't care if it hit the video. I have a target here. I know that black box is finished, but I know it is gonna continue to this target this area, this TP. This black box is TP. I know it is gonna do it. It has to. It can't trade forever in this area. It can't. It's not possible. Then, that's the best choice. Unfortunately, change direction and hit our stop loss. Okay. Our target is this one, which means because this black box target is done, I am only going to take partials at TP3. Why? TP3 is not hit. Remember, I told you the most important place is TP3. And if the market moves a lot, this gonna be TP3. After that, trade your stop. I told you that. So, the next logical place, if the market had continued dumping down and hit TP3, I will take margin. I'll take my margin as well. 30% of my entry up there at TP2 and my partials down. If the market had continued trading down, I already know we're in a downward direction until that high is broken. We are in a downward direction. Then in that case, I'm gonna reverse the Fibonacci to the upside. Why? We change the direction. So, okay, so that is beautiful. That is beautiful. Then what happened? Unfortunately, it changed direction and it my stop loss. Along the way, it made another block to the upside. The P2 is already at my entry. What does that mean? It means I am going to take partials only at P3 while because the P2 is at my entry. So how do I do that now? I am going to enter a buy. Stop loss still down there. Okay. A little bit risky, but it is worth it. Why? Because as you can see, this is our target. It is going to be a huge amount. Start building up. As another buy, start building up. Okay. And finally, it confirmed that we are moving up. Where? Exactly up there, it confirmed we are moving up. So I was right in my direction down there. Buying at the very lowest area. Isn't that crazy, bro? No strategy can give you that kind of precision. No other strategy other than levels. Then what happened? A buy entry non-stop, of course, an entry upside. Waiting for TP3 now. I am still expecting lower prices. I am in a sell for this one and expecting TP3, but the market just kept pumping. Right there, it didn't hit my stop loss is up there, 2.5%. Then it dumped, so now it's in my direction, but still a loss. But here I am in again, I am in profit. I'm in a little bit drawdown there. After that it pumped up, hit my stop loss, I am out of the trade. I am in the trade with this one. Still, TP3 is most likely up there, which means I'm gonna take 30% off. Do you see what I'm going with this? We are constantly minimizing risk and building up positions, pyramiding. This is not pyramiding actually, but it is putting on more positions when you are sure that it's going in your direction and minimizing your risk. How? My stop loss that's protecting. So if my direction is not right, I should be out in the best price possible. Not up there, not up there. My stop loss is not gonna be up there, bro. No. That is for the damage. I mean, that is for the people who don't know about the platforms. So, what happened? Buy position scale, 30% of TP3 hit. If TP3 is hit, and price pumps to the upside further, it is best to trade. It is best to trade. TP3 is hit and it is far away from your entry. As you can see, this thing is not far away, it is still lingering around your entry. So you gotta see the market trade up above TP3. If it pumps like this one, this is TP3 for this plan looks. And hit this TP3, I will place my entry at my stop loss at my entry level. Why? It is far away. But here it is TP3 right here and my entry down there. I'm not gonna put my stop loss up there yet. Why? My target is this one. Don't forget that that's the narrative. This narrative is gonna be useful for you later times. That's why it is better to find a previous bigger black box and trade based on their direction, based on their take profit level, TP2 and TP7. It is worth it, I'm telling you, it's worth it. We are actually still buying and selling inside this part, regardless of the black box's direction, the bigger black box direction. We sold, then we bought again, then another buy, then another buy, then another buy, right? So you can see, let me zoom, and let's finish this thing up. So remember what I told you. If TP3 is right below your entry, right around your entry, don't trade or stop yet. It has to leave that place. It has to leave that place. The price has to leave that place. As you can see, another black box. Trade up, beautiful. That candle didn't break the 5%. This bullish candle, but the red candle did. How it traded up. So now we are in a buy. Want to stop loss still downside, entry upside. Risk, reward. Okay. This is another position from this buy, another position this right here. Buy. Then another interesting happened. Interesting thing happened. 1, 2, 3. I'm gonna show you everything. We sold. What does that mean? I'm gonna sell now. I don't care, bro. I'm selling. So I sell. Stop loss still up there. Risk, reward, most likely. We are pumping down. Then actually the price supported this black box. As you can see, you can trade the second model. If TP2 is not hit, as you can see, TP2 is found here. If TP2 is not hit, you can trade the second model. I told you that. Don't forget about that. Don't forget. So this was the black box that we previously entered after a buy. Then it came down without hitting TP2. What does that mean? We are already in a buy mode. It means that it is a buy opportunity down there. Even though I sold there, this is another buy. Okay. You are pyramiding, you are putting on more positions. Then the sale here turned out to be a loss. I'm gonna be honest, I'll be frank. Okay, there is no hiding or nothing. Another loss here and another 2 losses, but these buys, these 3 buys are still in play. They are still pumping up. So TP2 hit 30% off. Let the other pump it up. TP3 30% off. Let the other then right there we found another black box. What does that mean? What does that mean? We are building up. Remember, our target is to the downside, the bigger one. We are still in a sell position. With this one. With this, we are using what? We broke the 2 candles to the downside. So our tip is to the downside. Until that high is broken, we are in a sell mode. But we are buying this because we are trading the new black box, not this one, not this one. This is gonna be used as a target price level, potential price levels that the market might reach. Okay. Then what happened here? 3 candles made equal lows, as you can see. Then the market purchased them. We bought up there 2.5% purchase. Okay. You determine the TP3 for this breaking candle. You determine the body, you use the body code. Okay. Slow down, gang, slow down. So here what happened? This was black, right? But after before the candle broke, look which candles are similar in shape. Only this and this are similar in shape. This one is not. This is full-bodied candle. These are hammers. These two are hammers. What does that mean? I'm gonna focus on the hammers now. I don't care about this one. Okay? Then market broke. I'm gonna use the hammers. This one's the low and the high. Determine my tips. Okay? Determine my tips. I have tips. And then based on this extension, my TP3, TP1, no, TP2 is heat. TP2 is heat, but not TP3. What does that mean? I'm not going to take any profits yet. I mean, not partials off. No. My stop loss down there. Remember, I told you this is going to be at 2.5%. This is the low. That is not 2.5%. 2.5% is down there. Even the grid is guiding you. The grid, this grid is guiding you. Okay, you put your stop loss down. I told you that this place is a hunting area. The lows and the highs are hunting areas. So you gotta place your stop loss a little far. They will hunt you before they move up. That's the rules. This kinds of thing does not happen a lot most of the time, but sometimes they are nasty. They are nasty. So you press your stop loss. That's it. It is not hit if the spread is good. Since we are trading on the 1 hour, the spread is gonna be tight. It will be now, okay. You are not trading the 1 minute. So most of the brokers will have a tight spread. And then stop loss down. Then when you zoom out entry, drop the risk. This is risk. Potentially, this is profit. This is reward. That's the reward. Maybe 1 to 2 or something. And then finally the market pumped up. Everything satisfied. TP3, take partials. Take partials. Then TP, wait for TP for this bigger profit. What happened? It hit it, take partials. The rest of the positions that we are in a buy here, and there. Okay. You wanna take partials for example, okay? At TP20. If TP2 is already at your entry level, take partial at TP3. Okay. Then after that the market pumped. It went up and up and up and TP2 achieved finally TP3 for this one. Look after TP3 what it is to look. It is stop trading. And started another black box that I showed you earlier. What is this black box gonna be? It is gonna be a buy. Why? We broke the upside, that's a buy down there stop loss. I can show you this if you want. There we go. Rise, it is this one. I say buy, look, another pump. It is crazy. Why? Because the target is this one TP, bro. It is not this little black box. They are just trying their best to move up. Okay? They are accumulating orders, executing it, distributing it, and accumulating, distributing it. until they reach the TP2 for this black box. So we're gonna see a huge pump to the upside. Why we broke to the upside now? I'm gonna reverse my extension, my Fibonacci to the upside. So I'm gonna build my position to the upside. Trail my stop loss for this one. Entry. That's the buy. For this bias, I'm gonna trail my stop to the upside. Simple as that, right? So this is it. In the next video, okay, let me show you first this one. Let me first show you what should happen. Okay, now press this one right here. So that is where we entered, down there. That is the very start of the trade, bro. Oh my goodness, look at this. At the very start of the trade, we entered the trade. And what is our TP2? Here we go, the Holy Grail. That is where we take partials again. We take partials, or you can, whatever you want, you can trade yourself. If you can't take partials, then you can trail your stop. And the price is expected for TP3 if it pumps up again. So if you can see, just like I said, pump, then pump, another pump to TP3. And look how convenient it is at exactly TP3. Look what the price did. It's down. It's down. So everything has a reason. Everything has a reason. If you are trading based off of previous inefficient black boxes, these kinds of things are gonna happen. That's a huge peak, I don't know, it could be 200 pips or something. It is a 1 hour time frame. It is not 1 minute here. So that's a huge peak. That's a huge pump. So look at the reactions. Look at the reaction of TP1. Look. It traded down, then pump again. At TP2, look. I told you they traded deep and then another pullback. At TP3, another pullback, but then down. So everything has a reason also. So next time we'll see this one, and hopefully we'll finish this boring exercise. I mean, I don't see them as boring, but they are very, very good. I mean, what if you saw the videos on ICT? You probably have watched some of his videos, and these videos, some of them are like wild. They are 4 hours, 4 hours, 3 hours, 2 hours. It is just crazy. So ours is also approaching that 1 hour mark, but it's okay. It's not that bad, and it's nothing complicated like the ICT Pro. It is not complicated. Simple. It is a KG level. It's a kindergarten level. Everyone can do it, bro. My grandma can do it, bro. It's very easy. It's very easy. Another setup here, huge black box. So when I'm trading this, I'm really in my mind, and on the chart I am placing this as the price will gravitate upside. But actually first until that high is broken, I am projecting the Fibonacci to the downside. You can do it in both sides. Project one Fibonacci to the downside, and then take another Fibonacci and project it to the upside. It's okay. It's okay. And uncheck the TP1 mark. You don't need it. TP1 you don't need it. The only thing that we are interested in is TP2 and TP3. So only price levels. Then look what happened. TP2. Another accumulation. TP3 complete dump. It's beautiful. So entering as the start of the trade, it is just a black box's way of execution, but its precision is nuts. It is crazy. So I'm not gonna bore you anymore, so I'll see you in the next one. So peace out.